Going on? Welcome back to Trading Options Network. We are doing our afternoon live training here. But as always, we got to go ahead and get away this disclaimer. Get it out of the way, I should say. This is solely for educational purposes only. And we have more lights. And of course, this is not the opinion of Trading Options Network. So do with it what you will. But you do have to go ahead and like, follow, or subscribe at your favorite social media platform to stay up to date with everything. That being said, let's go ahead. One thing I wanted to point out. Tomorrow we are going to have the unemployment claims as well as the ADP non-farm employment change. Those are going to potentially move the market. I don't know how. I can honestly say with bad news, it could be good for the market. And with good news, it could be good with the market. It just really depends on how the market wants to take it, especially with what good old Jerome Powell said today. So again, will those numbers move the market? They probably will, especially if they do miss the forecast by a substantial amount. But the question is which way? We'll find out tomorrow morning, that's for sure, before the market opens. And I'm sure I'll probably talk about it quite a bit. All right, so other than that, let's see what the market has done so far since this morning. It has been pretty much green all day since we got off of the call earlier. As you can see, we got off the call right around, 11:30 Eastern time. So right around here, I think I actually even mentioned right there that the market shot up while we were looking, hey, is this going to be a pullback? And then we go up more. What's it going to happen? This is exactly where that was. And then since then, it's gone up. We had a decent pullback here, but again, it's just gone up and up and up and up pretty much for the rest of the day since then. So overall, obviously I've been saying this over and over again. We're still in a bull market. That is not going to change until the charts show us that we're no longer in a bull market. And we are getting closer to breaking out of this consolidation. We're not quite broken out, in my opinion, yet. I mean, you can argue, if you were to use these two candles, the two red candles from previous highs, technically previous opens or closes, then yes, we've broken out. But if we use the wicks, we obviously have not broken out. So again, I mean, you can argue either way. I mean, that's the one thing about trading is you can make the same argument or a different argument on the exact same chart for different reasons. So that's why nothing is ever going to be, 100%. Nothing's going to be exact. We're all going to have our own opinions, our own biases. One thing we can say is, we definitely have a good support right there. So whether we break that support, or we go ahead and break resistance. I mean, time will tell. That's the name of the game. Time will tell. It's never going to change. We can't fight that. So all we can do is watch and with the education that we have, make educated decisions. I tell people all the time that trading options is nothing more than educated gambling. It's still gambling because we don't have a crystal ball. We don't know what's going to happen. It's like if perfect example, we could have all the information in the world, know exactly what's going on, but look what happened to Purdue the other, two NCAA tournaments ago. They were the number 1 seed and they lost to the 16 seed, first time that's ever happened. You could have bet 10 grand on that game, expecting that, hey, Purdue is going to win. And in the end, they didn't. I mean, it's very, very similar to that. We could have all the information we need to make a decision that is a 99.999% chance of happening, but there's still that 0.001% chance that it doesn't happen. So again, this is educated gambling at best. So all we can do is make educated decisions. So S&P looking very green, If we go ahead and pull up our sectors, oops, a little too far down there. Let's pull up the charts. All right, let's just look at the 1 hour charts here. So S&P, as I've said, has been green. Basic materials here, you can argue, has been somewhat green. Let's go to the 15-minute chart so we can see more of the day. So here, again, green. Materials, looks like it's actually red for the day. Well, yeah, it says it right there. It's down about 1/3%. Communication services has been green today. Energy is red. It actually gapped up and then got sold off. So, that's one of those where, if you see something gap up and it just sells off all day, then that tells me that the sellers are in control. The bears are in control there still. Even if it is having that little bit of a candle there in the last 15 minutes, since we are on a 15-minute chart here. The financial sector has been very strong today. Industrial sector has been meh kind of today. It was up 1/3%, but it's been pretty much flat up until, an hour ago or so. Technology up 1/3%. Consumer staples up a little under 0.5%. But look at the previous few days. It's been red, 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 and maybe we're having a little bit of a bounce. We'll look at the whole chart here in a second because now I'm actually curious about this one. Real estate, flat. Utilities, 0.5% up. Excuse me, healthcare is down almost 0.5%. And last but not least, sorry, I had to get something to drink. We have our consumer discretionary here that is the most bullish of the day. That's because of good old Tesla there. Tesla is definitely pushing that sector higher. And of course, you know what? Go figure. I just realized you guys can't see my pretty face, so voila, here I am. So back to here. I did want to go ahead, like I said, I wanted to take a look at the consumer staples. Pardon me, I got to grab some water here really quick. So let's take a look at it. Much better. All right. So consumer staples has been pretty bullish. The question is right now, we've been range bound for sure. I think I was talking about this one this morning, but I can't quite remember off the top of my head. So we're going to talk about it again, in case you weren't here this morning anyways. But nonetheless, we've been range bound. We're at that bottom of the range. So two things can happen. We can break below this support here, or we can just bounce off it like we have the last couple of times and move back up to the top of the range and see what happens when we get back up there. With consumer staples, I mean, it's been a pretty strong sector with a few very strong stocks in there. Let's go ahead and pull up the actual sector itself. Remember, consumer staples is the same as consumer defensive. We have 252 stocks here. Again, I'm going to go ahead and get the ones over $10 and the ones with more volume because they are typically going to be the ones, in fact, we could even go higher than $10. But these 38 stocks are probably going to, I would estimate, and I don't know this for sure, this is a total guess, an educated guess at that, but I would guess these 38 stocks probably control 75%, maybe 80% of what the sector does. So let's go ahead and look at some of these charts here. I mean, there's 38 of them. So ACI, Albertsons has been brutal. Archer Daniels looks like it's been brutal. Gap down again. I'm going to assume that was on an earnings. Good Lord. I mean, that would have been nice to have shorted there. But has been, for the most part, obviously came back up and has been neutral since. Brown-Forman, ugly chart. British American Tobacco. Never have I seen this chart. Never have I even heard of the company. I don't know what to make of it. It's like extremely cyclical, but if you were to look at the big picture, maybe it looks like it's reversing there. Maybe if I were to zoom out more, maybe we're going to see a big cup and handle or something. I mean, we can almost argue. You can almost argue this was a cup and handle, but if we look even bigger, this was a cup and handle. If we look even bigger, we can even be, making a bigger cup. So that one's an interesting one. Conagra Brands again. One I haven't really looked at. It's been bearish more recently. Celsius Holdings, definitely for the last month has been getting crushed. And then we have Colgate. I think we talked about this one this morning. In fact, I'm almost positive we did. Looking phenomenal. Looking very, very good. Campbell's Soup. I forgot that they were a public company. I don't really come across the chart very often. But nonetheless, I mean, it's been a slow and very choppy, yet somewhat of an uptrend. So, take that one with what you will. Darling Ingredients has been brutal in the last month and a half. Dollar General has been brutal. Dollar Tree has been brutal. I mean, these are just, gosh, I remember when I actually just got out of a position right before the earnings here, like maybe a couple of days, because again, I don't like to play earnings. And oh my, that was a heck of a move there. And then pretty much since then, it couldn't even fill the gap. That's how weak that stock has been since, and it's just been doing nothing but going down. Estee Lauder, okay, again, it's been brutal. So more of these stocks within the consumer defensive or consumer staples sector, more of them have been bearish than anything. Yet, if I pull up, is that XLP, I believe? Yep. Consumer staples. The chart itself, well, I guess for the last month and a half has been, again, in that range, which kind of makes sense considering half of them are very strong and half of them are very weak. So you would expect that to be kind of the overall chart of the entire sector, is if they're kind of playing a tug of war within the sector, it should be a relatively neutral, kind of choppy sector. And that's exactly what we're seeing. So the question is, who's going to win that tug of war? And then on top of that, consumer staples is a relatively big sector of the market. If I come over here, consumer staples, right here, this sector right here, I guess, I mean, it's, what would you call it? Maybe 10% of the market. Okay, so I was actually thinking it was the consumer cyclical, which is a little bit bigger. I had these flip-flopped in my head. Again, it's very easy to do because they're almost the same sector. But nonetheless, if you put the consumers together, obviously it makes more closer to probably, not quite 20%, maybe 15, 18% of the market. But again, you have all these stocks here that are just, playing tug of war. And then with the consumer cyclical, same thing. You have Amazon and Tesla that are basically keeping everything up. A lot of that is red there. Nike, McDonald's, Chipotle, which, by the way, if you haven't heard, a 50-for-1 split. That was insane. Starbucks there. Booking.com. Yeah. Airbnb is up a little bit. But a lot of these are red. Home Depot and Lowe's. Tractor Supply. Yes, we have O'Reilly Automotive is up a decent amount. But again, we have a lot of red in here. The Tesla and the Amazon for the consumer cyclicals, keeping it up. Walmart, Costco, Procter & Gamble, Pepsi. A lot of these are, really pulling up consumer defensive as well. So back over here. this is so interesting. Come back over to consumer cyclical. You know, again, that one's looking pretty. Lots of green or lots of bulls here, but I am definitely seeing a lot of bears. Like, what is this one? BYON. Oh, Beyond Meat, of course. That has just been getting crushed and will continuously get crushed. I don't think Beyond Meat's going to actually be here very long. The way they're going. Of course, McDonald's, if you haven't heard, they were sampling Beyond Meat patties, or Beyond the Impossible beef patties, or whatever they were, in a couple markets. I believe one was in Texas and one was in Seattle, if I recall, and it totally bombed. Nobody cared for it. Nobody wanted it. So that really hurt Beyond Meat. But again, you know, we look at these sectors, and overall, the consumer cyclical, if I come back and look at them all together. Okay, we have our consumer staples here and our consumer discretionary here. Again, this is the one that has Tesla and Amazon and all them in there. For the most part, I mean, this one with Tesla and Amazon being very green lately, this one is showing to be a little bit better than normal. If I pull up the whole chart here, you know, it was definitely range bound for, you know, well, you can argue is range bound anyways for a little while here, and is recently breaking out what actually today is breaking out of what we could say was previous resistance. So a lot of these companies in the consumer discretionary sector, you know, we can argue this could be a good bull opportunity. So let's go ahead and, well, I don't know. This one's so hard because, of course, Tesla being up almost 10% today, you know, what happens if there's a big pullback in Tesla tomorrow because people start profit taking and it starts to make this entire sector drop. So let's see if we can get another couple more green candles outside of this, and then potentially, you know, we can look for more bulls inside of that sector. But nonetheless, I mean, the market, if I just go back to the SPY here, the market overall is looking good today. It does look like we are wanting to get on the path of breaking out from this consolidation. We haven't yet. So it's not like we need to go balls to the wall on some bullish trades. We don't need to do that yet. Speaking of trades, though, let's go ahead and take a look at the two that we had so far. If I click on monitor here, T-Mobile is looking very nice. We are up $966 since we opened that one just yesterday. Okay. Roblox, we are down a little bit, but if we go ahead and let's go ahead and look at the chart for Roblox. Honestly, the chart itself still looks just fine. We did just open it today. We should expect to see some choppiness in the market today, and it looks like, of course, when we opened it, it was more closer to that top of that range there. But nonetheless, we are still in a good position. Oops, wrong way. Okay, we are still green for the day. We're still over the 20. The 20 recently crossed the 50. Excuse me. I actually really like the fact that the CCI here, gosh, why can't I think of what the line itself is called? This white line, it came back and touched the 100, and then it wanted to go back up. So now the question, though, is, you know, is this going to give us some kind of, gosh, what's the word right now? Oh, darn it. I'll think of it in a second. The MACD is still looking like it could be going higher. Bearish divergence, that's what I was trying to say. Are we going to get some bearish divergence here where this comes up and maybe it goes up to maybe here, halfway up to this last peak while we hit a new high? If that's the case, and then we start rolling over, again, that's called bearish divergence. That is a bearish signal. That is a sell signal. Okay, if we get a new high in the chart, we want to see a new high in the CCI. Okay, and that would make sense. So like right here, you know, we here We're all the way up here. Now this isn't a new high, so we can't actually count that. This was very, very close, but that's still not divergence. Yes, we got a new high with the same level, but again, the bearish divergence would be if the CCI fails to make a new high on the CCI, while the stock price itself does make a new high. That's called, again, bearish divergence, and that would be a sell signal. So if we are up over the next couple days, if we do get some kind of bearish divergence there, then yeah, that'll be a sell signal. We'll get out of our trade, and we'll be happy with at least a small amount of profit. So overall, again, I'm not worried about this trade on Roblox. I mean, truth be told, it's not in the grand scheme of things, is not a big drop. Let's see, we went from 94 to 74 and then 35 to 25, so that's about a 10-cent drop. But again, we have 100 contracts here. Okay. So 100 contracts is going to obviously add up quickly. So if we go up just a little bit tomorrow, that, $1,155 that we're down right now, that's only 1%. But that'll easily come right back. So I'm not worried about that yet. Now, of course, if tomorrow starts dropping, then yeah, we're going to have to get out of our position for a loss. I understand that. So did I? No, I didn't. No, that's right. Okay. Anyways, sorry, I was doing some math in my head real quick. But anyways, overall, I'm liking where we're at. We're only down $200 since opening these trades, but these are week-long trades. These are positions we're going to hold for an entire week. We want to see some theta play in here. We're not going to get our gains until that theta really does its thing. Theta essentially is what will kill a out of the money strike, or out of the money option. So again, T-Mobile, for example, these out of the money calls are still worth 72 cents each. That's a lot. Considering we have 23 of them, if they all start, and if we were to finish right to today, and it was out of the money, these would be worthless. So that's another 72 cents times $23. Let's go ahead and go down here. 72 times 23. That's $1,656 that we'll be adding on these particular legs. Now, of course, this would drop a little bit as well if we didn't go any higher. So that would take away a little bit from that $1,656. But again, when we looked at we did the analyze for it. Why is it showing McDonald's here? I don't want McDonald's. Okay, there we go. Not Roblox, T-Mobile there. Get rid of Roblox. All right, here we go. T-Mobile. If we finish at max gain, that's $2,800 roughly speaking. Okay, $2,800. And that's if the stock only moves up. What are we at right now for the stock itself? 179.40. So if the stock itself moves up 60 cents, that's it, just 60 cents by Friday, we would have made $2,800 on this trade. Right now, we are at 966. Okay, so we're at 966. We have a potential to make another $1,900 almost. That's if the stock goes up, what did I say, 40 cents or 60 cents, whatever it was. Roblox, on the other hand, it is at, we'd have a 37.50, 39 vertical call spread that expires in 10 days. So if we go ahead and look at Roblox really quick. Oops, wrong button. There we go. We did move a little bit out of the money for now, but again, the chart itself looks just fine. I'm not worried yet. 30 37. If it can go up to 39 by not this Friday, but the following Friday, we'll have a max gain, which will be great. That'll be about $4,000 gain. All it has to do is go up $1.70 in almost 2 weeks. If I pull up, let's go ahead and go back to FinViz really quick. This will be the last thing we do, and then we're going to call it a day. But if I go ahead and pull up Roblox, let's go ahead and look at our ATR. Again, it's the average true range. Oops, not the Arun oscillator. Never used that before. Don't even know what it is. All right, so ATR is $1.15. ATR is the average true range that measures the peak, the high and the low of the day. So on average right now, and I believe we have it set for 14, that should be the default. Yeah, 14 days. Okay, so the average range in the last 14 days is $1.15. That's how much the highs and the lows were. If you'd average the high and the low, the range from the high and the low for the last 14 days, it would average $1.15. We need to go up $1.70 over the course of, we have 5 trading days plus 2 more this week. So we have 7 trading days to go up $1.70 on a stock that has an ATR of $1.15. You think that's doable? Do the math. So not worried about this one yet. Again, if it starts breaking down all of a sudden, then yeah, we're going to have to take it for a loss, and it is what it is. Again, I'm not too worried about that. Not every trade is going to be a win. You got to remember that. We'll never, ever, ever have wins 100% of the time. In fact, I saw one, a person earlier says, I could give you a 90% win rate. No, you can't. You can't give a 90% win rate. If you had a 90% win rate, then that tells me you're taking very small profits and you're taking very large losses. Because if you had a 90% win rate, you'd be a multi-billionaire. You'd be the richest person in the world. Not even Warren Buffett has a 90% win rate. So that being said, don't listen to those fools that say they can give you a 90% win rate. It's going to be very, very risky. I'm not trying to get a 90% win rate. I'm not even trying to get an 80 or even a 70% win rate. My goal is to have about a 60% win rate. When it comes to trading options, professional traders are not those that are able to get 90% win rates. And again, if they are saying that they're doing that, they're freaking lying to you, or again, their losses are wiping out their 10% losses are wiping out their 90% gains. Being a good trader is about mitigating those trades that do go against you. So that's why we have to watch it closely. We have to watch it closely. So I've got nothing else. I'm not going to open any other trades, I don't think, today, unless something crazy happens. But, if you guys have any questions, obviously don't hesitate to reach out. Put a comment on the video, whatever you guys want to do. That's what I'm here for. That's what I enjoy doing. I want to see you all become super, super successful traders. So, keep working hard. Keep learning.